Hello, championship viewers. How you doing? Welcome to the Knockout Interviews presented by Championship Real Estate. I'm Mike Kehoe, and this is the show where our guests share with you their very best and their very worst real estate investing experiences so you can learn firsthand from their experiences and apply them to your very own investing careers, whether you're just getting started or you're already in the game. With us today, we have the one and only Joe Fairless. How you doing, Joe?
Hey, doing well. Thanks for having me on the show. I appreciate it.
Absolutely. So nice to have you on the show. A little about Joe. Joe is based out of Cincinnati, Ohio. He's a full-time real estate investor who started buying multifamily properties in 2013 and now controls over $162 million of real estate. He is also the host of the Best Real Estate Investing Advice Ever show, where he has interviewed guests such as Barbara Corcoran, Robert Kiyosaki, Emmett Smith, and Tony Hawk. Truly fantastic. How you doing today, Joe? You want to give us a little bit more about your background and what you're focused on right now?
Sure, of course. My background is I lived in New York City, where you're at now, for 10 years. And I'm originally from Texas, so moved up from Texas to New York City. After moving, I was in advertising for 7-8 of those years and decided that I didn't want to do that anymore. So on the side, and this is how we met originally, on the side I started doing random things like hosting meetups because I was investing in houses in Texas, even though I was living in New York City, and all my friends were like, how are you doing that? How do you have homes, but you live here? And I said that so many times, and you have a full-time job here. And so I talked to a lot of people about that. And eventually I was like, I'm going to do a class on it. And I started teaching classes on the side about how I was doing real estate investing. I was doing some other stuff too, like stand-up comedy. I was just learning how to do stand-up comedy, which is a little crazy. Yeah, it's crazy. And so I did that, and
I want to hear some of that.
well, I'll tell you that I performed twice, and one of the places has been shut down since then. So that's how bad I was.
Probably not because of you. Definitely not because of you.
Well, I don't know. I was pretty bad. And so I started doing the real estate thing in 2009. I bought my first house, and now I've got focused on multifamily properties where I buy apartment communities with accredited investors, and we buy them together, and we partner up. And so, as you mentioned, I've got over $160 million worth of apartment communities now, all of them in Texas.
Truly amazing. And what are you working on right now?
I am closing on my 10th deal that we'll have in our portfolio, which will push us over 170 million for sure. And we're closing in 2 days. So wow. That's a big focus. I mean, everything's pretty much set, but until you actually close, you want to make sure all your T's are crossed and your I's are dotted.
Absolutely.
Additionally, I just got married this past weekend.
So I heard.
Yes.
The newly married Joe Fairless. Congratulations again.
Yes, thank you. And then we're just doing the podcast thing. It's the world's longest running daily real estate investing podcast, and been doing it over 1,000 days straight. Interviewed all those people, and so got a lot going on.
That really requires a huge commitment.
It does. It's at first it was a huge time commitment, but now it's more a priority commitment, and it is a priority because it's the foundation of my business that helps investors get to know me better, faster, and other potential business partners. So it's been great.
Absolutely. So that all sounds fantastic. Now I need to ask you, are you ready to jump into the main event?
This sounds fantastic. I did my workout earlier today, but I could still use some more cardio. So
Yeah,
I'm looking forward to this.
this is like a second workout. So,
Great. All right.
okay. So the way the show works is we ask all of our guests to share with our viewers two extremely memorable experiences in their investing careers. So first up, tell our viewers about a knockout deal that you've done and that you absolutely loved. And tell us why it was such a knockout and the lessons you learned from it.
Sure. August 2015, my business partner and I closed on a 250 unit deal in Houston, Texas for $14.1 million. And it was at a time when, and this, by the way, if anyone listening is like, okay, dude, 14.1 million, I'm not at that point. You can be, but if you're not, the lesson still applies to you on any scale. Or maybe you're above 14.1 and you're like, is that it? And if that case, props to you. So point is, by the end of this lesson will be applicable to everyone in real estate. So we buy a place for 14.1 million. We bought it at the time. If you do some Google searches for oil in August 2015, Houston, you're going to find that every talking head on any news channel was saying oil's in trouble, Houston's going down, stay away from real estate in Houston right now. Well, we actually had a lender back out relatively close to the closing date. We had to get a new lender. We had to patch some things together. Fast forward this past December, so about 15 months or so from when we closed, we have had completed the majority of our repositioning, and it appraised for $21.6 million.
Wow.
We put in $2 million. So in improvement money. So we're all in at 16, and it appraises for over $21 million.
Wow.
That is a deal, the lesson learned. And we've returned over 50% to our investors in less than 2 years on this deal. And so the lesson learned is that don't listen to the people who aren't doing what you're doing. The people who are talking about it on news channels probably, unless they're real estate investors themselves, probably are getting their information from someone else. And therefore, you really need to identify what is that other source's motive. And when people are saying go left, usually you're going to come out ahead if you go right. You're going to get burned, but more often than not, if you do things differently from other people, you're going to come out ahead, assuming that you follow some, fundamental principles with investing, and that is you buy for cash flow, you don't over leverage, and you set your financing up so that you're not forced to sell in a tough time. And so that would be my favorite knockout deal.
Great. Would you say that you typically operate in that contrarian type of mindset?
Not generally. We are investing. The last 8 purchases have been in Dallas Fort Worth, and a lot of people are high on Dallas Fort Worth. I'm from Dallas Fort Worth. I'm high on it as well. But in that situation, our 250 unit, there was a major contrarian component. There can be some times where we go against the grain, but it's not every deal. At this point, we just are more competitive. We have better relationships with brokers and things like that to get off-market deals, so that we can instead of being contrarian. So I guess really it's finding your angle. Because instead of being contrarian, we're still getting good opportunities because we have fantastic relationships with brokers who send us these pocket listings or off-market deals.
So what would you say was the most critical component to finding that deal?
Well, relationship with the broker would be one, and then being able to sell the opportunity to investors at a time when every news station was saying don't invest in Houston. And you have to know the fundamentals of why it makes sense. And so, just knowing the fundamentals that I mentioned earlier.
Right. So would you say that sticking to those principles that you invest by are what made that deal happen?
Yeah, absolutely.
Very cool. Very cool. So now what are they saying? What are the talking heads saying about Dallas or Houston? Bye, bye, bye.
Yeah. So the interesting part is that I don't listen to any of them.
Mm-hmm.
So I'm not
Just
sure.
better off.
The TV's not on ever
Mm-hmm.
unless we're watching some Netflix movie
Mm-hmm.
towards the end of the night. So don't know, don't really care.
Yeah. Sounds like it doesn't matter as long as all the other pieces are in place.
Yeah, I knew what the talking heads were saying because I got that feedback from investors. They're like, "Wait, are you sure about Houston? Here's what I'm hearing." It's like, oh, okay, let's talk about this.
So, what would you attribute? What quality or practice do you employ when it comes to explaining that to investors?
Well, it's what I was mentioning earlier, just the fundamentals.
Mm-hmm.
So I mentioned here the fundamentals. Here's the other big thing about a market is the job diversity from an industrial or industry standpoint. You want to make sure that no one industry makes up more than 27% of the market. Ideally, you want to be in the low 20s or even better in the teens. For example, I don't have the stats of Houston off the top of my head, but I do know Dallas-Fort Worth, the largest industry is 14%, which is nothing. I mean, it's so incredibly diverse, according to census.gov. So, you'll want to take a look at that. And mention that, hey, if one industry goes down, then you got a lot of other industries that can pick up the slack.
Mm-hmm. So it sounds like knowing your facts is extremely critical when reassuring your investors.
Yes, absolutely. Yep.
Great. All right. Well, now it's time for the fun part. So you just told us about a knockout deal you've done, and now we're going to flip the script. Tell us about a deal that you've done that almost knocked you down for the count, and what challenges you ran into, if you have one.
Oh, I got lots of them.
Okay.
But I know it's a short program, so I'd say one deal that comes to mind would be the first deal I messed up on, and that's for a single-family house. Up until that point, I had been sticking to a formula, and it wasn't a sexy formula, but it was working. And it was, you buy a house that has $10,000 in equity in it at closing. So you're buying with basically, if you pay $90,000, then it's worth at least $100,000 based on sales comps in the area. Two, it makes at least $100 a month when you factor in all expenses and the rent coming in. And three, it's at least $1,000 to get it, or it's at most $1,000 to be move-in ready. Those are the only three things I was looking for. So if I had $10,000 in equity in it, if I was making $100 a month, and if I only had to spend $1,000 or less to get a tenant to move in there because there wasn't a lot of stuff to get fixed, worked for me.
Seems pretty straightforward.
And I followed that formula for the first three homes. Worked out. I still have those homes. Fourth one, not so much.
Not so much.
The fourth one, I thought I'd get a little clever. I'd venture from that formula, and I bought a house from a wholesaler. It was $35,000. Apparently, it only needed $5,000 to be move-in ready. I used a $40,000 line of credit, which isn't relevant, but I thought it'd be interesting to mention. Use this
Definitely.
$40,000 line of credit from American Airlines Credit Union at 7% interest rate, and we closed on it. It was renting. There had a tenant in it, and it rented for $700. I'm forgetting the exact numbers, but it's basically this what I'm telling you. I remember the purchase price, but I forget what it was renting for. That's the exact number. I forgot, but I think it was around 700. Well, it ended up costing not $5,000, but $15,000 to be move-in ready, and it didn't take 1 month. It took like 5 to 6 months to get move-in ready. And there were a couple mistakes I made. One is I didn't qualify the contractor well enough. I actually hired a good friend of mine, his dad.
So you would think he would be
but it just
reliable.
it was their only job that they had apparently, and it just it didn't work out. Second thing is that I bought a fixer-upper when I knew it needed work, but the previous homes I didn't. And since I wasn't local, I wasn't able to oversee the contractors, then it didn't work out. And that was, $15,000, a whole lot of money. It still is, but it was more money to me at the time when I had my W-2 job. And, I'm calculating. I'm like, wait, 15,000, how many days? No, how many months do I have to work to actually make up for that mistake? And so, that would be something that really is etched in my mind. And the takeaway, regardless of what you're investing in, is have a formula and follow the formula. If it's working for you, follow it. And then you can tweak it along the way and maybe venture outside of your comfort zone and evolve it, but make sure that you're evolving it, you're not recreating it.
Well, it sounds that like the first 3 houses that you did stick to the formula.
I did.
Is that right?
Yeah.
And those worked out pretty well.
I still have them. Yeah. I mean, they've doubled more, at least doubled, and not that it matters if they doubled in value, because if I'm not selling, that it doesn't really matter. But the rent has continued to increase. I make like $300 or so a month from each of the 3, plus they've at least doubled in value. So I've got a bunch of equity in them. Yeah, great.
Yeah. So would you say that sticking to your criteria is critical for new investors?
Yeah, I'd say so.
Okay.
Yeah, absolutely.
And regarding contracting, where do you think you fell short with vetting out the contractor as opposed to what you do now?
You want to talk to, I didn't talk to anyone of his clients, because it's my buddy's dad.
Sure.
But now we not only talk to their referrals, but we talk to their referrals.
Oh,
so
wow.
If they refer someone, you talk to them, but then you say, do you know anyone else who they've done business with? Because I'd love to talk to that person too, because they don't expect you to talk to the referral.
Right. Okay. Did you know him before?
Oh yeah. I did.
Okay.
I did, but just whatever, didn't work out.
Yeah. So how did you get back on your feet after that one? That specific deal?
Well,
did you sell?
I sold it. It, probably lost $5,000, maybe $10,000 on it. Had to. Oh, and the reason why I mentioned the rent earlier is that it rented for pretty much about what it rented for before all these renovations, which was a miss on my part with the market analysis. I didn't look at the right rent comps, and just thought it would be renting for more than what it should be.
Well, you recovered well since then.
Yep.
Yeah. And, now you learn from that, and it sounds like this is something that you can apply to your current business, and I'm sure you do apply those same lessons today.
Absolutely.
Fantastic. Well, thanks for sharing.
Yeah, it's a fun format that you got. I'm enjoying it.
Great. Yeah, me too. So, are you ready for the knockout lightning round?
Is this gonna actually knock me out?
Well, you're a tough guy, so I think you could withstand it.
Okay, I'll stay on my toes then.
Yeah,
I got to make sure I'm looking at it from all angles. Yes, let's do
exactly.
it.
Be prepared.
All right.
Okay. What is your ultimate knockout real estate investing quote?
Secret to living is giving, and that is not just a real estate investing quote. That's my approach in general. You help enough people get what they want, you'll eventually get everything that you want. And that's why I do a daily podcast. Done it for the last, I don't know, 1,100 days or something like that. Something crazy. Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday.
Uh-huh.
I've had an episode released for over 1,000 days.
Superb.
And it's free. It's a free, it's no, you don't pay anything to listen to it.
Right. So, would you say that your perspective is if I give this many people or as many people as possible knowledge and perspective with my podcast, that will come back to you? Is that how you
Yeah,
view
I
it?
think I think the knowledge part is so readily available already. I mean, we all have enough. There's already enough information out there. It's about getting to the meat of the issues is what I think people really appreciate about my show, because I say at the beginning of every show, we don't get into any of the fluffy stuff. It's we get into their best advice. We talk about deals like we do on this show, which is great. And we talk about failures and how they've overcome it and stuff. So
Right.
yeah, so I think it's having a way to have a Cliff Notes version of interviews is what has helped me out a lot.
Sure. And, technically that is giving.
Yeah. Oh yeah.
Absolutely. Yeah.
Yep.
Great. Okay. What's your knockout real estate investing book?
I'd say Crucial Conversations, and this is not a direct real estate book unless you want to get better with working with people, which everyone needs to get better at working with people because this is a people business.
Definitely.
Crucial Conversations is about how to have successful conversations even when you disagree with the other person and the stakes are high. So it walks you through a formula for how to do that.
Great. Okay. What is your knockout? And I may know this already, but what is your knockout habit that you practice?
Liter of water with a scoop of wheatgrass every morning. I've done that for, I don't know, like 3 years or something.
A liter.
A liter of water. Yeah, every morning when I wake up, I have a liter of water with a scoop of wheatgrass.
You must be full after that.
I still have oatmeal with some whey protein in it.
Okay.
But I'm certainly hydrated after that.
Yeah, it's important.
Yes.
Okay. And what is the knockout way you like to spend your time when you're not working on real estate?
With my wife. And that would be, we just worked out earlier, did like some running around the track earlier this morning, go ride bikes around town, go to a bar, have a drink, go to dinner,
Sure.
hang out with our friends, that sort of stuff.
Great. All right. Well, what's the knockout way people can get in touch with you?
You can, for everyone listening who wants to learn more about multifamily investing, 2 ways. One is you can simply go to multifamilysyndication.com. Or 2, if you email us, we'll get you a free guide with a bunch of apartment resources. So you can email info@joefairless.com, mention that you heard the knockout interview, and we'll get you the apartment resources guide for free.
Great. And we'll, to our viewers, we'll have that information in the show notes.
Sweet.
All right, Joe. Well, it's been great. I think that we really ran the gamut in terms of your experience and your knockout deal you've done. That was super great, and the lessons learned from your single family house that didn't go exactly as planned. So, thank you again for being on the show today, and we'll talk to you soon.
Hey, thanks a lot. Really enjoyed it. This was a fun interview.
Absolutely. Have a good
All
one.
right. Bye.
All right. Bye.